Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade Chain Crypto Update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, November 7th, heading into obviously the second week of November. Total crypto market cap has dropped, about 1% since yesterday, 1.31 trillion. Average daily sentiment is slightly up, but obviously Bitcoin and ETH sentiment is mostly neutral. Bitcoin and ETH both down. Obviously, ETH performing worse, and we did talk about ETH BTC yesterday. Total tweet volume is also down as well, showing little apathy in the crypto market right now after obviously all of the bullish price action we've had. Total trading volume still above that magic number, 40 billion. So that is good. If we do start to see this dip this week, that will be another kind of concern for the bulls. Hottest on Twitter not performing too well. Blur still doing well. This EWT is randomly up, random shit coins, but high bullish sentiment. So congrats to any TTC members who caught that one. Most bullish coins are mostly bullish. ZIL have been actually tracking ZIL. Pardon me. Have actually been tracking ZIL and a bit shocked at why sentiment is so high and price action is not performing, but not every coin is going to hit. Although every most bearish coin is performing pretty poorly today. Some interesting exchange flows, a lot of crap coins, PHA, Elon, MXC, TRB. This one's definitely interesting considering how high it has gone. Do have to wonder, is there something is there a reversal brewing on the horizon? We did have a lot of stablecoin inflows, around midnight, but it's been mostly outflows. Since yesterday, we did have that really big outflow spike right around the start of the US session yesterday too. And obviously nothing has really moved higher. So let's head over to DXY, which is moving higher. Remember, we talked yesterday, it was right around here. It did break back up into this range that we've been in since, kind of mid to late September. So that is definitely concerning if you thought, that the DXY rally was over. This could be considered a deviation. Remember, every time it has kind of tried to deviate or tapped this level, it has ended up running to the highs up here, or at least close. So very much something to consider there. If I had to guess, as long as we stay above this level, it will be something, maybe something like this, heading into, maybe FOMC meetings. So maybe we just kind of stay flat here, but kind of inching higher. And if we are inching higher, does bode, not too well for risk assets. So very much something to monitor, especially since we're kind of getting back into this range. And if we kind of zoom out, let's zoom out on the weekly. We do have obviously, this high, and we have this high back here. So this is going to be kind of like a little demand zone right here. So if we end up, kind of coming up here, if we break up, that's going to, probably shoot us up here. And then if we reject, it should be something like that. But right now, if you're kind of thinking about general market structure, as we like to talk about, you had this lower low, basically was a deviation. Now you have a higher high. So we were talking about this with equities. So we have this higher high. So as long as we stay above this level on the trend, it's still a higher low, and that could propel us higher. So definitely want to watch out. I mean, this could be a higher low too. And then we just, do something like that. So right now, nothing to glean too much from DXY, but it is currently in a position where, and let's let this load up. It is currently in a position where it will probably start to, try and get back into this range. And this is kind of mid-range right here. So if we reject here and get sent lower, that's obviously what the bulls, risk asset bulls, I should say, want to see. So we'll have to continue to contend, or have to continue to track this because obviously, held pretty well here, got this deviation. Right now, definitely looking like the bull trend is still going to stay intact. So next area we'll watch out for is kind of this 106.2, break above it, head up here, get rejected, probably head back to these lows. Let's move over to equities, which are having a pretty good day today. As you can see, kind of called that out to the TTC community. We are above the 43.75, which was the high from last week. So definitely, making new high, talking about market structure there. So let's zoom out to the 4-hour. Let's get rid of those indicators down here. Actually, I'm going to bring those back up because it looks like 4 hours pretty overbought, but obviously we are inching higher, and sometimes RSI can become a meme. And we do know when stock RSI, kind of has this little flip right here, typically it will end up running back up before heading lower. So going to get rid of this, and let's talk about, a little bit more price action here. So obviously 4,400 right here, these highs, going to be very contentious. Obviously, we are kind of selling off a little bit as we inch into this demand zone, as we have pretty much every time we've been in this demand zone. So if you can get above 4,400, you can head higher. If we close below 43.75 today, that could be a rejection very similar to this candle right here. And I would expect things to probably at least head down here. But 4,300 looks a little bit more likely, just the way that we've been tracking this 4-hour estimated 200 moving average trend. So moral of the story for equities, you want a 4-hour close above 43.75. If you get that, probably tag 4,400. And then depending on how you react up here, you could get sent, down here, or you could break up. So nothing obviously clear, kind of depends on the next couple of candles here, but pretty defined risk. If you close below 43.75, set your stop up here, short lower, and if we break up, then no real trade there unless you were longing from down here, and then you'll have to see how 4,400 looks, and if you break up, or if we do kind of like a deviation, then you get sent back lower. So looking at Bitcoin, bit weird here, so we talked about the Monday range, we got the Monday high right here, we got the Monday low right here. So this, these white lines are a Monday range. The play this morning was going to be a break, a kind of confirmation above the Monday low, send us back to the highs. Obviously, there was no confirmation. I did take that long. I did exit for a very minimal loss. But the longer we stay below the Monday low, the more likely it becomes that we end up tagging 3,400 or 34,000, I should say. Sorry, couldn't get that out. But of course, right when you think it's the darkest moment is when the sun ends up rising. So right now we are holding the 1-hour estimated 200 moving average. And if we kind of zoom out a little bit, it's been holding this trend pretty well. Obviously no taps on this move, but if we look back, Friday it held, Sunday it held. Right now it is holding. So not ready to count Bitcoin out just yet, because we could do something like this where we just end up, moving higher. But if we do break beneath these lows or close below the 1-hour estimated 200 moving average, like right now, we're kind of sitting on that precipice. So if we kind of inch down a little bit and close lower by 1 o'clock, I'm on Eastern time, then that would probably be a signal that we will likely end up grabbing 34K. But if we hold this level into 1 p.m., then maybe you can get something like that. But the moral of the story is get above this low. You have a trajectory to get back up to these highs, break beneath the trend that's been holding us, and you will probably end up down near 34K, or maybe, at 34.2, something like that. And then obviously, if, we've talked about this before, you break below 34K, probably going to end up in this area. I've talked about this, many times throughout last week and this week. So I hope everybody was listening. But right now, the only two trades are below 1-hour estimated 200 moving average, 34K, get back above the Monday low, target the Monday high, or at least mid-range, which is probably going to be somewhere around like 35K flat. So somewhere around here. Let's look at ETH. Let's first look at ETH BTC. We did talk about this yesterday. I'm going to kind of zoom out on the 4-hour to give you a bit better of a view. So, we are still riding this trend, and I did discuss, the fact that this is going to be a resistance. This is obviously, looked a little sketchy. We're obviously heading lower. We did do this again. So maybe we drop down into somewhere around this liquidity here, and then maybe we get another boost up higher. I don't really know how that's exactly going to play out, but I do know, if we get back below this, this kind of little range right here, we're going to end up sweeping these lows again. But again, we've been on this trend. So, there's no real reason to fight this trend yet. But if we do get below this area, ETH is going to get very weak. And right now, there's no reason to be trading ETH over Bitcoin unless you are, shorting ETH BTC, which isn't the worst bet. But again, you're going to contend with some liquidity here. You're going to contend with some liquidity here. So most of that trade is kind of up. So best to just track reaction here. And if it breaks lower, then we continue to short ETH BTC or just turn the focus to Bitcoin in general. So, back to ETH, on the 4 hours. So, there's a couple of ways to look at this. And obviously we are, we're breaking beneath this 1860 level, which I was thinking 1830, but also I did kind of, I didn't ignore it, but I didn't really do the best job, staring at this trend. This trend is obviously very much still valid. So you really want 1850, 1845 to hold in this area. And if that is the case, why is this not? There we go. If you can hold this area, then you can do something like this. And maybe that's when ETH BTC gets saved. But it is very risky because what this currently looks like is a giant deviation above the previous range. And if we close back within the range, typically what's going to happen is you're going to end up, at least finding mid-range or dropping down to the low end of the range. And then if we, look at this on the daily, we can see that. So this was this Sunday. So let me try and I'm going to get rid of this trend just to make things a little bit more clear. So this line right here is going to coincide with the weekly high. So the weekly high is obviously from Sunday. It's really tough to kind of tell, but as you can see, this wick right here swept. So basically yesterday, Monday, we swept last week's high, and then we ended up moving lower, right? So then we are, kind of now moving. Yeah, that's a little bit exaggerated, but from a daily perspective, as you can see, this range is where we sat in for a while. We just deviated above the range, and then we deviated above the previous high, right? The previous weekly high. And now we are, both deviated that. And now we are currently, as we speak, trading back within the previous range. So that is quite bearish, in my opinion. Doesn't mean it can't be saved. It can certainly be saved. We still have plenty of time left in the daily. But if you're just thinking about general, market structure, and what you want to see, that is not ideally what you want to see. And here we go. This doesn't look too bad. So now we're looking at the hourly. Again, looking at the 1 hour estimated 200 moving average, held here last Friday as it did for Bitcoin. Obviously performed much better than Bitcoin over the weekend, but now we're kind of getting to this 1 hour estimated 200 moving average here, and I'll kind of redraw this trend. And as you'll see here, it coincides perfectly with the 1 hour estimated 200 moving average. So there's no reason to get overzealous and short this yet, because what's happening right now is everybody who's seeing this break is immediately diving in. Obviously, we are now kind of seeing some buyback action here. It doesn't mean it will hold, but if we can get back above this level, then we're back above the trend, and then we have a route to get back above the previous or the Monday low. And if we can get back above the Monday low, then we can, start to ride the Monday high, which, is very similar to Bitcoin, the very similar trade compared to Bitcoin, right? Get back above this level, move up here. So ETH, although a little bit more exaggerated, the Monday low is circled right there. So, and then obviously the range high is kind of up here. So if we can get back above the range high, maybe get up here. And then, if we can get back above this level, that's a great confirmation for a trade higher. Not going to lie, with this type of wicking action along at this level with a stop down below, the stop is basically sitting right on the trend. It's sitting right above the 1 hour estimated 200 moving average. So if you wanted to get, overzealous, not the worst time to take a risky long, just considering, equities did move a bit higher, obviously not, staying as high as we would like. But if we just go ahead and look at the LTF Bitcoin, pretty good reaction at the 1 hour estimated 200 moving average. You have your low down here. Your risk is well defined. So if you wanted to take a long and kind of just treat it the exact same way that it's done on each of these different moves, there's your trade opportunity right there, right? So, patience is waiting for a close above the Monday long. Getting a little bit overzealous is doing it right now, but you do have defined risk. You can always bounce out early or however you want to do it. But, there is defined risk here with, moving up higher. But, safer method would be A, close above 1858, 1860, B, close above 1868, 1870, and then you have your trade hopefully up higher. Doesn't mean it will happen, but from a technical perspective, that is your trade. And then obviously, if we break below the trend, we break below the 1 hour estimated moving average, then we'll start to look at each of these levels: 1830, 1800, 1777, and then 1750. All natural targets for downside on ETH. So maybe if you are shorting here 25%, 55%, 75%, 100% out, not a bad way to look at that. But again, there's no reason to short, in my opinion, because you're shorting at support with a possible deviation forming. And we have some trade opportunities higher. The trade opportunities lower have really yet to present themselves because we need to see a break right here. So with that being said, that's going to be it for most of today's session. Don't want to give away all the goods, as TTC community still gets the bulk, not the bulk, all of our analysis and daily trade updates and daily trade calls. So if you're not in the TTC community, head over to www.tradethechain.com for your 14-day free trial. Get access to the community data, all of our emails, content, education, daily trade updates, daily macro updates, daily micro updates, everything you need to get the day started and obviously continue the day successfully. So with that being said, good luck, happy trading. See everybody tomorrow.